All right, everybody, we're going to go and get started. First of all, thanks to everyone for attending today. I always love having investors join us to learn about different components of investing. So that's certainly a good thing. What we're going to talk about today is how to invest in private deals using your IRA. It's a little known fact you can do that. So like to make sure everybody kind of is on an even playing field. Everybody knows the different options that are out there. We start with the disclaimer because we're Ticker Tape Investments and we do offer investments to other folks. Got to tell you that there is no offer to sell securities during this conference call. And none of our entities give any kind of professional advice, whether it be legal, tax, professional, business, investment advice, none of those things. And with any investment, there's always risks that you could lose all of your money. That having been said, today we're here to talk about investing through your IRA. So first of all, for those of you who don't know us, give you a quick overview on Ticker Tape Investments and who we are. TTI is a member-managed private equity fund. It is also an affiliation of a bunch of individual investors who pool their capital, their deal flow, their expertise in evaluating deals to find and invest in deals. And the reason we do this is a couple things. Number one, I'm Tom Schmidt. I'm just an individual guy. I have a limited amount of capital that I have available to invest, but I'd like to take advantage of opportunities that require a higher minimum than what I can personally put in. And so I pool my capital with other folks like you, and we find deals, put them together, and invest together. So Ticker Tape is really a loose affiliation of a bunch of investors who work together to find deals. We do have two funds, Ticker Tape Investments, which is closed, and then Ticker Tape 2, which is still open to new investors. It invests in early stage deals. And then we put together lots and lots of single purpose entities for purposes of investing in apartment complexes, hotels, businesses, healthcare related real estate deals, and of course, pre-IPO deals. Over the years, we've put together, I haven't counted recently, but certainly over 30 individual investments. We have single purpose entities available to new investors, including TTI Solar, TTI Gaming, TTI Debt, and TTI Metaverse. And there's also, you'll hear about in a minute, an opportunity to invest in utility rescue, but that's not through Ticker Tape. That would be a direct investment in utility rescue, the corporation. We've done multiple exits ranging from surgery centers to pre-IPO deals to debt deals that have been repaid. Lots of sort of turnover in the various deals. A bunch of them we're still holding for the longer term. We have a hotel in Miami is depicted in that little graphic. Of course, SpaceX is a long-term hold. And then a few of them we're looking to hopefully go public in the short term. Impossible Foods, Kraken, Indigo Agriculture, USA Rare Earth is one of our bigger deals. We'd love for that to go public soon. I was just telling a group of folks that I hope that Automation Anywhere and ThoughtSpot hold out a little longer because we want them to take more advantage of this AI revolution before they go public, because that will improve the amount of our return, right? So what's the idea here behind investing with your IRA? Why are we here? Why does Ticker Tape Investments exist? And the short answer is because private investments outperform over the long term. The reason Ticker Tape Investments exists is so that our friends and our partners can take advantage of more private deals by deploying a smaller amount of capital per deal in more deals, right? So Tom Schmidt, personally, I'm now invested probably in 50 different transactions and deals. With an average investment, it probably averages between 25 and 50. I have a couple deals I've put in 100,000 or more, a handful that I put 10,000 or 25,000 in. kind of in the middle now. Now at this point, I'm typically investing about 50 grand per deal. Well, if you're investing 10,000 per deal, you aren't going to find many private deals that are going to take that low of a minimum. What Ticker Tape does is we'll aggregate your 10,000 with 15, 20 other people, and all of a sudden you can participate in a deal. That's kind of the idea. Why do we want to invest in private deals? Because they outperform the stock market. Even if you're in a hedge fund or a private equity fund paying 2% and 20% in fees, even with those higher fees, they've outperformed the stock market consistently. I'm not saying you shouldn't be in the stock market. I'm not saying take all your money out of your IRAs and your other mutual funds and your other investments and put them in private deals. What I'm saying is you need to have some of your capital, some of your portfolio invested outside of the stock market and outside of bonds, because it adds a significant amount of return to your portfolio that can help you in fluctuation times. The other thing that is probably less spoken about is that everyone knows the stock market can tank, right? We learned that in 2001, and we learned it again in 2007, and we learned it again in 2020. The stock market can fluctuate. Privately held deals, privately held companies aren't valued based on people's expectations. They're valued based on the economics of the company. So it can reduce the volatility in your portfolio to have a sizable chunk of your money in privately held deals. For instance, when the stock market tanked in 2020, companies like Impossible Foods didn't tank because they weren't publicly traded. They were privately held. So our position in that company basically continued to increase in value as opposed to declining in value with the stock market. So that's another reason, but that all adds up to the expectation of the long-term return from private deals is greater. And what's happening in the very recent history, let's say since Obama got elected in 2008, all the money is being made before the companies go public. And that's because of what happened with Facebook and Google and Sarbanes-Oxley. All these companies have decided to delay going public. So more of their growth curve happens before the stock is publicly traded. What does that mean? When they ultimately go public, you're paying a much higher valuation. There used to be 0 companies that were valued over $1 billion that were privately held. Maybe one. Coke may have been, the Coke Oil Company may have been $1 billion valuation back in the 80s and 90s without being public. But short of that, it was if you got that big, you were publicly traded. Now there's literally hundreds of companies that are being valued by venture capital and private equity greater than $1 billion and not publicly traded. You got to get in before they go public or you miss out on that big upside. So let's get to the punchline here. How do you invest using your IRA? So the first thing is, if you have an IRA account, you probably have it at one of the big companies like Fidelity or Schwab or one of the big banks, Merrill Lynch maybe. And those companies likely will not allow you to do what we call self-directed IRA investing. And that's really what we're talking about, is that you're going to make your own decisions as to how your capital is invested. And so you need to have what they call a self-directed IRA account. And then what you do is, once you get that account set up, you obviously transfer whatever you've got in your IRA. It could be a Roth, could be a traditional IRA. So you can have a self-directed Roth IRA or a self-directed traditional IRA. If you have a 401k from an old employer, you can roll that over into a self-directed. But what we would do is we would help you set up an account with a self-directed IRA, help you get the funds from your existing IRA transferred into that new account. And then you find your investments, right? It could be, they have companies that will sell you gold, physical gold, into your IRA, and we would connect your IRA company with that investment. You just provide whatever documents your new self-directed IRA custodian wants on your new investment. You would provide the self-directed IRA custodian with the subscription agreement, which they actually sign, and then you'll sign a separate agreement basically giving the custodian instructions to invest how you want them invested. So let's go back through those quickly. First of all, you've got to take your existing IRA and convert it into a self-directed IRA. This has no tax implications. There's no fees to speak of. You may pay, depending upon which company you use, you may pay $100 or $300 a year, depending upon the different companies. They have different fee structures. But if you're working with, $50,000, $100,000 or more, they become de minimis fees to manage the IRA. And typically, by the way, you're paying Fidelity or Schwab or whoever some fees anyway. So there's lots of companies that do this. The one that Ticker Tape works with primarily is Quest, and Rita Carpel, who, by the way, is on the call. Rita, you can say hi. Rita has a many-year relationship. We're getting old now. It could even be a decade-long relationship with one of the folks at Quest, who what's awesome about that is she can kind of get you through, make you skip some of the red tape and the process of getting your account set up and get it done a lot quicker by introducing you to her contact and let them hold your hand and get it done quickly. Personally, I have my self-directed IRA with NewView. Very easy to work with. They're a little frustrating sometimes with the processes. And of course, I had to go through sort of the standard walk in off the street kind of handling when I set it up, because I didn't have Rita pulling strings for me at Quest. But there's lots of other companies you can do this through. Advanta, Strata, Millennium are all other ones that Rita says that y'all can't see my screen.
Yes, we
cannot
cannot
see
it. Can you hear me?
my picture and the slide saying how to invest using your IRA?
I do not see that.
Says it's still recording. Rita, I cannot hear you if you're talking. Bear with me, everybody. I'm just making sure y'all can all see this. Huh. I have a little tab that says audience view that shows me that y'all can see my slide. I'm ready to go to the next one. Well, hopefully you guys can hear me okay. And if you can't see the slides while we're going, then just ping Rita after the fact and we'll make sure that that we send them over to you. They're not particularly helpful anyway, other than just having the words that I'm saying. Whereas Kay just put a question in saying we see and hear just fine. So maybe it's a problem on Rita's end, hopefully. In any event, so then once you get the account set up, then what you do is you put your IRA custodian in touch with the company you want to invest with. And again, certainly all of Ticker Tape's deals, Utility Rescue, the deals we work on, we always have investors that are investing through their IRA. So we're very good at this, figure out how to do it. Doesn't matter what company you work with, we'll figure out their forms and get all that done. But typically, just using Kay, for example, Kay would contact NewView and say, hey, NewView, I want to invest with Ticker Tape. And then Rita would coordinate with NewView to get the right paperwork done. You may, ultimately, you're going to get a document like the one here on the screen that says private placement purchase authorization. I don't remember how many pages this was. It's 3 or 4 pages. And you'll have to sign that authorizing whether it's Quest or NewView or whoever, giving them authorization to make the investment for you. This is a form I use I put $100,000 in TTI Diversified Resources, which is a hotel investment actually. And you can see it has my bank information that is, oh, sorry, no, that's not my bank information. That's where they're supposed to send the money. So it gives them the wiring instruction for that. And then depending upon which company you partner with, may have a different form or whatnot to complete the information. but at the end of the day, it's the same sort of process. And then what will happen is the investment has to be legitimate. It can't be a company that you own or control unless you declare that, and then there's special rules around that. But they're going to want to know that it's a legitimate deal, right? So we've had to provide everything from tax returns to corporate like bylaws and articles of organization, and tax ID numbers, et cetera. And then of course the investment documents. So if there's a prospectus, the subscription agreement, et cetera, all that stuff goes to the custodian. In my case, NewView. For other people, it's Quest. And then the custodian actually signs the subscription agreement, and the investor, I should have prepared for this, I could have pulled one out, but the investor in the deal is NewView, or let's say Quest, IRA, FBO, K, comma, account number, blah, blah, blah. And so technically it's your IRA, which is a separate legal entity, that is the investor. And it's like a trust where the trustee is the person at Quest who manages your account. And so then everything related to the investment goes back to your IRA. And you'll sign the agreement telling the custodian, if you will, what to do, how to do it, et cetera. After that, it's easy. If there's a K1 generated, it gets sent from the company you invested in to Quest. Of course, you'll get a copy or whatnot, but it's not going on your personal tax return. It goes to the IRA. So if there's a gain, then it's not taxable to you until you either withdraw from the IRA or depending upon whether it's Roth or traditional, et cetera, whatever the taxable impact for the IRA is, as opposed to you personally. So that can be a huge benefit. If there's a cash distribution, like we had one guy invested in TTI debt through his IRA, and so that makes our job a little harder. But when we distribute interest payments, they actually go to his IRA company, not to him personally, right? And so that, of course, builds up the balance in your IRA. And then same thing like with a shareholder vote. Kay, you would not be the individual share. I'm singling her out, I guess punishing her for letting me know she could see it here, which is mean, but sorry, I apologize. Example investor would not be the one that votes on stuff. You would have to go to the custodian and have them vote in your stead. There are some rules around this, but at the end of the day, I'm a big fan of sort of keeping it simple. If you use one of these major companies that's a legitimate company, and certainly Quest and NewView are enormous and very well respected in the space. If you use a reputable company and you personally don't have any participation in the vehicle you're investing in other words, it's not your own company, it's someone else's, and you're becoming a shareholder investing, then everything is pretty simple. It's almost impossible to mess something up, as long as you make sure that the company you're investing in knows that it's an IRA, knows that's where any distributions go. If the company goes public, then the shares are registered in the name of the IRA, not in your individual name, and go there. And more or less, it's very easy to avoid any kind of tax penalties or anything like that, as long as you keep it simple. Like I say, if you start investing in your own companies, if you start moving things around too much and you don't document everything appropriately, stuff like that, you could be penalized with some sort of tax penalty. But again, as long as you keep it straightforward, it's very easy. I've been doing it for years. I've done multiple investments this way, and frankly, I sort of prefer to do it this way because the tax implications for me are significantly less. And that's it. It's literally that simple. For those of you, let's see. Kay asks another question, should look at Rocket Dollar checkbook SD IRA, $360 per year, irrespective of account size or number of investments made. Also much less hassle than dealing with these other IRA custodians. So first of all, I actually had not heard of Rocket Dollar until recently. I had just happened to see them mentioned. So I don't know anything about that entity, but certainly for those of you watching, listening, watching the recording, Rocket Dollar is recommended by at least one of our listeners as a potential opportunity. And $360 per year is certainly not the cheapest amount I've seen. Some of them are maybe less, but they do increase depending upon the size of your account. And she's saying Rocket Dollar is flat at 360. And frankly, I think I'm paying, I want to say either I'm paying 350 a year for mine, or I have a couple clients that have them, and somebody may have told me they're paying 350. So that sounds about right for kind of the market price. And she claims there's less hassle with them. You'd have to find out. Again, I don't know anything about the entity, but like I say, there's tons of these companies that are out there doing this, and it's becoming more and more popular. Why? Because again, private equity investments tend to outperform, and companies are going public much later in the cycle nowadays. So it's you kind of have to be able to do this in order to take advantage of that if you have most of your portfolio in an IRA. That's it for today. I'm going to drop off because we're going to go launch the webinar for the utility rescue offering. So we'll go do that right now. Thanks everybody for attending. And if you're watching live or in real time, just reach out to Rita Carpel if you have any additional questions. Thanks everybody.